Perfect. I think we can get started. So, good evening, everyone, and happy Friday. And thank you so much for joining. Uh, we just want to share our journey to over 200 plus units in last span of 2 to 3 years, and some of the lessons and things that you can implement so that you have the right mindset shift and you see the deals in a different way, and what are the challenges that can come through. So thank you so
Yeah.
much everyone for joining.
And I wanted to share that, again, no script. We just kind of put it together. And I think one thing that it's difficult to convey when we do workshops is when you build out a portfolio, each step of the way, what's the thought process? Because at least for me personally, guys, I'm influenced by the previous deal, right? So all the learnings or mistakes, actually mostly mistakes, I make it on perfect previous deal. I would sort of apply them in the next deal and then continue to build that out. So you'll see we're kind of all over the place at the beginning and in our timeline, investing in different type of properties, and then hopefully you'll see some uh, sense or logic around our steps after that. But I think Suman's taking a picture for social media. Is that what you're doing, Suman?
Yes, I'm just capturing picture. And folks, if you guys are okay, I know some of you are in the car, or like if you guys are comfortable, can we have a good picture?
Okay.
That's our starting ritual for all the sessions.
All right, let's do it.
Yeah, those were part
Put
of
my own
Infinite
name
know
here.
the ritual for sure. So
Yeah, let's do
give
it.
few minutes.
Yes.
Yes. Folks, I think I see Noor already ready for the pose. So Rakhi, Tan, Aitor, and Sandhu, if you guys are okay. Perfect. And yeah, others also, if you guys want to take the picture, all good. Okay. 1, 2, 3, go. Okay. Perfect. Thank you so much, folks. Yeah, you can go back to the comfortable zone if you want. Sit back and enjoy the
You get it?
session.
Okay.
Yes, we got it.
All right, let me just start this again. Oh, 1 second.
Yeah, I think you are on print screen. You have to do the escape option. Yep.
Yeah, 1 second here. Let's go that again. Oh, it got really slow after everyone joined. Okay.
Yeah, we have about 20 people now.
Okay. Great. Okay, so we'll just kick out again, very casual. Today we're going to be talking about how did we get to the 200. Um, Seven-figure capital raising, not too much in detail on how we got to 7 figures and capital raising, but also sharing, the 5 countries. I don't know. Did you put your India property here? I think you forgot to put that.
Yes, I think I missed that one, but yeah, probably for the next session for sure we can add
Oh,
it.
so no India property in this.
Yes, yes. So we'll only showcase the four.
Okay, so
But yeah,
you may be counting on today's session. We'll only have 4.
yes. But
So
officially it's 5.
okay, let's start our journey. So our journey starts in 2021, right? When I think Suman and I just thought, maybe we should do something with our lives, something different in real estate. And I think this is for me, at least in 2021, the pandemic was the catalyst, guys. Right? You're at home, you can't do anything. Working from home, staying with family is great, but I felt that with that type of environment where we actually had more time during the day to actually think about what else we could do. It was great. I think it was the first time, I don't know about you, Suman, where I got to work from home in
Yes,
2021.
it was a happy news definitely for, like, not in a way where because of the pandemic as such, but
Yeah, of course.
but in terms of getting opportunity to work from home, because
Yeah,
that meant less of commute. So that was a good opportunity for sure.
yeah,
And 2021, where so that time I was just starting out in the real estate, right? Like, many of you, we start somewhere, right? But it is much better than, not doing at all
yeah,
anything. So those of you, I know there are many people in different buckets. Like some of you are just starting and some of you are advanced, but we want to make sure everyone is in the same page, right? So even if you are starting, like I started with this one, did not do a lot of underwriting and all like those. I was still trying to pick up. It was more of kind of moving from basement to, somewhere on your own, right? So this was a single family on its own. So first lesson that I learned was whether to buy primary as a first is or not. There is no right or wrong answer. Okay. It is very subjective, and you have to make sure that you are convinced. Like it should not just be an emotional decision. Like when I started, it was less of an investor, more of an emotional buying, right? Because we are conditioned in a way where you think, okay, primary house should be my first step logical. I'm not saying that it should not be a step, but I'm saying there is no right or wrong answer. If today I have to go back, probably I will focus more on investment properties before I look. And this is just my perspective, right? There is no right or wrong answer.
Right.
So that should be the first takeaway for you.
Yeah, but you did good in the sense that at least
Yes. In a
one.
way, yes. Good thing what happened. And as I said, like it's much better than not taking action. So if you are sitting on the sidelines, we come across many people who are like for 2 years they're analyzing. Basically, they're just paralyzing themselves, because real
Yeah.
estate investing is scary, right? So it's very important that you moved. And in a way, good thing is, I was able to build an equity, and I even converted this into a legal duplex, right? So I did the conversion. So it has already a side entry, and I leveraged little bit of creative financing here. So, at that time I was introduced to the concepts of promissory notes. A big disclaimer, it is an unsecured and one of the most riskiest financing options. Okay, so if you are not aware of how to handle or make sure, it is one of the most unsecured. But I was working with my family and friends because I was just starting out, so I used kind of those kind of creative financing for this one, and it gave me an opportunity to go into conversions, work with the right team eventually, and then stabilize it, because of interest rate, it was pretty heavy.
Yeah.
Yeah.
So for me, we got a lot to go through, guys. So well, we're gonna
Yes,
keep
so we'll
going.
skim through,
Like,
so please don't mind.
go through. So
Yeah.
apologies. We'll definitely talk through it. Same as me, guys. Emotional buy. I thought, hey, buy anything in Toronto and you'll be fine, right? And definitely the worst mistake in terms of negative cash flow. I bought this town, almost all liquidity gone, no creative financing, emotional buy, because the only thing was, hey, nothing to do during COVID, buy real estate, buy in Toronto, you should be fine, right? Probably the biggest mistake I made. Uh, Probably purchased too high and got renters in way too low and was bleeding every month. So certainly this was my first step, and it was not a good step, but at least I'm happy to have taken the step to sort of just getting started in the real estate journey. So very simple for me, not like a long story like Suman. I just know that I learned from this as well. Emotional buy too during COVID. I thought, hey, you know what? My family can't do anything, so why don't I purchase some, remote Ontario, rural Ontario STRs. This is a resort community. I think that one of the great things after my mistake of the town is I looked to see, where can I get more rent? And I thought, hey, why don't I try and dip my toes into short-term rentals? Looking through regulations, I think the biggest learning from this, guys, is that if you're looking at short-term rentals, right now it's very highly regulated, but one type of zoning that will protect you is resort zoning. So there are areas within Canada where they're zoned as resort, and those type of regions will never be subjected to regulations. So definitely, if you guys are ever interested in STRs in Canada, yeah, look for resort zoning or reach out. We can talk sometime about it. But I'm glad I took the step. And again, emotional buy, guys. It's more just I wanted my family to be able to do something during the pandemic in 2021. So I invested in this. Yeah, traditional financing, you know, qualified barely. And yeah, I probably ran out of debt ratio by this time and nothing left. So that's mine too. And then that's it. I think Suman, that's all we did in 2021, right?
Yes. So 2021 was nothing fancy for us. We were just starting out. We started few positive was we started entering this uncomfortable zone, right? Because real estate, no matter what you are doing, it is an uncomfortable journey which you have to take. Like if you are serious about real estate, it's not an easy way. Like it's not as easy as going to the Walmarts and which many of you know, but we just want to stress upon that fact. So nothing much in 2021.
Cool.
Few things what we realized is your team played a key role. Like when I was starting out, I was not paying much attention about importance of power team. Just some of my friend told contact this person, that person, and I did not realize the importance of the right power team players, right? And what happens is you start off in a wrong foot. Like when Jason and I now discuss our journey before, what I realized that Jason got some good power team, like the banking professional or the who started his structure right and all those things. So his first step was much better, right? So if you are starting out, definitely pay attention to these kind of things for sure. Okay, like don't just listen to anyone if they are not investor friendly. Like I made that classic mistake, right?
Yeah.
And the second thing from this, so 2022, and I went for another single family home because multi-family still did not soak in, and I was not aware of those Ontario landlord tenant rules and all. Like these are all like those emotional buy. So me, my other friends,
But
we
it looks
went.
nice. Come on.
Yes, like the
It looks
properties
pretty
are
awesome.
definitely
How nice
nice.
the property looks.
Yes, the property is definitely nice, right? And we got it in a very good price. But here, and reason why we are sharing these mistakes, not to scare you all, but just to extract the learnings that we are taking forward in our journey, which will help you, right? So one thing that I discovered in this deal is when you are doing a joint venture, right? And everyone is on the title, the full loan reflects on your all the partners credit score. So let's say if me and Jason buy and there is a 600K loan, it will reflect 600K 600. So the same loan is pulling two partners down equally.
But
Okay,
that's residential, right? You're from
that's
residential.
residential, exactly. And second, this heavily relies on your debt ratios, and also by this time you are basically maxing out, and you can't do much with these kind of properties because there is not much value add opportunity, right? Uh, so this was the journey where I decided like, okay, probably single family homes, JVs on a personal name, not the best kind of routes, right? And this is where the shift started happening for me, which will be coming across in the coming uh,
Yeah, and
portfolios.
it's great that Suman, at least you took the chance, right? This is great.
Chance, yes,
And
exactly.
from it, and you still have an asset. That's why real estate is so
Yes.
great. It's not like a mistake, then you're dead in the water.
Right, right,
So,
exactly. So
yeah,
mistakes definitely can be corrected. And the main thing was happening is it was warming me up for the next bigger transactions.
yeah. So my next deal after my my short-term rentals for my kids and my family during COVID was 2022. Guys, I don't know, it seems like a long time away, but we were starting to get out of COVID, and I decided like, okay, you know what? Let me start with some remote investing, right? And I just looked, and I didn't buy this property at a really good price. I probably think overpaid, right? But I said, oh man, it looks like after I ran out of debt ratio on my townhome and STRs in Ontario, I thought, okay, the only way I can do this is commercial, right? So can this property support itself, right? So I just looked into New Brunswick and I looked for a property that had the biggest number of units that I could afford. And I got this one. This was 100% creative financing though, which was lucky for me. So there was VTB on it, right? And then I closed it with a promissory note too. Again, promissory note, most unsecured. So be careful with them. But lucky for me, I was able to get this for 100%. So I didn't have anything coming in my pocket. Again, I was looking at anywhere outside of Ontario. People online were saying New Brunswick, and it's a fantastic place, as Carrie and Christina know. But the great thing is, I look for the most number of units with 100% creative financing that I could do in my very first deal. This one, I think I overpaid by about.
Jason, Evo has one question.
We ask questions now. Okay, want to make sure limit to maybe one question because we have 200 units to go through, but we can just do one Evo.
Yeah, we can do a quick one.
Yeah.
Yeah, Jason, just a quick question. Sorry about that. I'm just interesting, as you said, 100% creative financing.
Yeah.
Like it was VTB was the down payment, or just if you can share a few more details about that. I'm interested.
VTB was the lion's share of the equity. I think it was like 78 to 80% vendor take back, Evo, and the remaining was the promissory. Yeah.
I see. Thank you.
Yeah. So VTB in first position, right? As the most, right? But good question. Yeah. It didn't really cash flow much. It at least broke even. But compared to my Ontario, Toronto property, this was fantastic. Breaking even was fantastic. My Ontario ones, I heard a lot. So I think this was great exercise for me. I just took the leap and tried it. And then now today it's stabilized. It's very good now. But back then I didn't know what I was doing, but I decided just to try it out. And today we're just talking about feelings and learnings, right? The reason why I was comfortable, guys, with this is that if I ever got into trouble with this property and I was just trying it out, I had at least invested in some properties in Toronto or Ontario, right? I could always leverage that to support this. This was sort of my learning, my first step into commercial. And I was comfortable to take that step because I already had taken some steps in Ontario. Sure, there were residential, but I had the confidence to try something new. So I started there.
Right.
Yeah.
I think that is very essential, right? Like it warms up your nerves and you have some equity and stability as compared to rather than money sitting in the bank or nothing at all, right?
And this one I want to just bring Carrie out, sort of call him out, is I look for the lowest price and the highest number of door properties. And I think I got this for like 130K, and Carrie always gets me on this. He's like, how the heck did you get a sixplex for 130K or something like that? Carrie's laughing there because all I did was I like, okay, well, I have a little bit more. How many units can I get for 100K? And it's not the best property, but again, I added a number of doors to this one, and it's been interesting one. This one, I call it the 300-day property because it was sitting on MLS or Realtor for 300 days and no one picked it up. So I was able to negotiate down by $70,000 on the purchase price. That's how I got it for so cheap. Yeah. So again, taking that, leap. And the great thing is this property and this property are next to each other. So I was able to leverage the same property management team for both these. They're on the same street right next to each other. And, this started my real strong relationship with the power team on the ground, which I'll share in the next property when I get to my next property. Suman, you want to talk about this one?
Yeah. So this was for me the first like a stepping stone. And I remember Jason and we were, Jason was one of my previous investor,
Yeah.
where we were started conversation, and then Jason and we were like, okay, we both have something in Ontario, but now we are looking for outside property. So we decided to go for this 2-unit, a small duplex in Alberta.
Was it to our discussion was like, we got to go to Alberta because people keep talking about Alberta as well.
Yes.
Let's try something small, right?
Smaller, yes, because new market, and this was kind of a remote investing, right?
Yeah.
So we don't want to stop ourselves by just being limited to Ontario. We wanted to explore other opportunities too. And we were like, okay, this was, I think, at a purchase price of 235 to 40, that
230 something,
similar to what we got for appraisal. So we were within the appraisal range, and the down payment again was very manageable. We did a joint venture in this one. Again, promissory notes, private lending, because till date.
But we found the same mistake as your single family home, right?
Yes. So here, what we did was we got this as a 2-unit, but one of them we realized it's a non-conforming, right? So the lenders or they don't count the income coming from the non-conforming. So if you are anytime getting like let's say 6 units, 7 units, just double check the zoning,
Yeah.
check with your lenders and do those things. But good part is it's a decent cash flowing property. So it is present in a place where there is less appreciation, but it is a cash flowing property. So it's so far going good, no troubles as such. But
Yeah.
we started forming building our out of Ontario provinces as well.
Right. Yeah.
So
So I
so
mean, for
that's
anyone starting their journey, I mean, even a small duplex in somewhere in Alberta is not bad, right, to start. All
yes,
right, let's get to the bigger stuff. We're starting to grow now. So you want to talk
yes.
about, I think I was one of
Uh,
your lenders on this one, right?
sorry.
Didn't I lend you money for this?
Yes, correct. This was the one. Yes. So Jason and I, we were, he was one of my investors, and he already got his principal return because we always focus on return on capital and return of capital. So that was the main thing. So this one was found through, the off-market deals,
Yeah.
and initially the deal was not making sense, right? Then we negotiated with the seller and we were able to get 83 to 85% of the VTB
Oh my
on
God, that's insane.
first
83%
position.
of the value?
Uh,
Oof.
yes. So we did not, and those, many of you are already familiar with VTB, but if someone is not, basically the seller is giving you the financing. Now we get a lot of question why the seller would finance. That is a separate discussion altogether. Definitely reach to Jason or I, but there are a lot of advantages to the seller as well. Um, so this was 83 to 85% VTV seller financing first position, and then the remaining was through the private lenders because I was heavily, networking, connecting with people, understanding their goals. Because for capital raising, it's you have to be very active. Like you cannot wait for a deal and then say, okay, now let me go and search for capital. You have to build relation and understand. So that's
Yeah.
how we closed it through VTB and private lending.
And I can safe to say I was an investor and I got my principal back and all the interest I was promised. So thank you, Suman, for
Most
that.
welcome. And I remember I also added, like, I think when it was during a special event of Jason's life, and I just added like a small token of appreciation from interest
Yeah.
also. The beauty about creative financing is you can get creative, of course, you have to make sure the numbers are making sense for both the parties. But yeah, that's the beauty of creative financing. Like you control the terms and you can go above and beyond, of
Yeah.
course, as making sure the numbers and everything makes sense.
The special time was my birthday, guys. So I think one of the things is that it gave me confidence that hey, this guy Suman, this guy did it. He gave me all my money back for my investment, and an extra $100 is not bad for my birthday. So thanks,
Yes,
Suman. I think
yes,
I
no.
haven't. I think I owe you for that. So, but we'll get.
Oh no, come on. But yes, like that's something, you should always look forward for your
Yeah,
investors too, like how you can, give them a great experience, right? It's about them.
yeah, absolutely. It's been great. So I think that was up for 2022, right? We started getting to bigger multis, right?
Yes.
Away from Ontario. No offense to people that really enjoy Ontario investing. It's just, but we got away from it a bit.
Yeah, it's just our goals were, and for those who don't know about Newfoundland or Alberta market, so why we chose these kind of market, one is the price per door is much more better. And when you go to commercial multifamily, there is a concept called as forced appreciation. Like if I try to change the rental income in the single families, I cannot move the levers a lot. But if we are going 5+ units, you have much more control in terms of deciding the value of the property.
Right.
And also, these markets are investor friendly, where we can execute our business plan. Tenant turnovers are much more easier as compared to Ontario, where there is a huge backlog for landlord tenant board. So that's why we started building our power team and portfolio outside.
Yeah. So I guess before we go to that bigger one, I can talk about this. So the great thing about so I started in New Brunswick as in terms of remote investing from Ontario. I live in Ontario. And I said before, you remember in 2022, I bought two properties next to each other, right? An 8 unit, a 6 unit. Well, because I built a strong relationship on the ground with the power team. When I mean power team, I mean, of course, the property management, contractors, also the lawyer on the ground, and even the insurance broker. She's really good, and appraiser. They know that, hey, you know what, this guy picked up a couple of properties, right? So I asked them, if you hear of any deals, right, whether it be through your work as a contractor, property manager, or a lawyer, let me know. So I was able to pick up 11-unit portfolio in the same region, guys, just through relationships, because I think a portion of this was being renovated by some of the contractors, and they said, hey, we're renovating this for BMO or something, or one of the banks, and maybe they'll be interested in a cash deal. So I said, okay, well, just give it to me. I mean, I'll try it. I mean, I'm just trying it out. I have some property in New Brunswick already. Just give it to me. So basically, in the end, it was they said, okay, it has been unconditional, and they have to take and the period is very short, no financing conditions or anything. So I said, okay, I'll try it. So by this time, I was able to refi one of the Ontario properties in 2021, right? If you remember, for those of you at the beginning of this call, I had some Ontario properties. So I had refied one of them to pay for this portfolio. So again, I wasn't too concerned about financing. I wasn't using creative financing as much, but at the same time, I thought, hey, you know what? These properties are foreclosure properties. They're power sales properties that the banks took over. Let me try and work on some experience with this, right? So this was my first experience in sort of bank foreclosure type of properties, and luckily enough, it was a portfolio, and I have to say, they've done very well. And in terms of financing, I leveraged my 2021 initial steps to help finance this one. So nothing out of pocket, right? So that's how I got to 11. And it's been quite a journey, these 11 units. I mean, I had to build parking lots, right? I had to add units. I had to change, everything from electrical, roofing, siding, everything. But in the end, I would say these 11 units, folks, have actually made me the most equity out of most of my New Brunswick investments. And it's only because, they're bank foreclosure. And you know what? Even before that, it's because of the relationship with my power team. I showed them I can actually close properties there. They let me know what's going on. And you know what? I've visited these properties 3 times now. I think it's more times than Kerry has visited the properties up here, right? And he's in New Brunswick, so. But yeah, I also was on the ground, shook the people's hands, and said, "Hey, here's a Tim Hortons card as well," and said, "You guys let me know. I know I'm in Ontario, but I'm willing to come here to try to help improve your neighborhood and help your community." So that's how I've done it. Anyways, I keep calling on Kerry. I'm sorry, Kerry. I don't know. It's Kerry bashing day. I don't mean that.
Yes, and many of you guys have a question, right? Like, how do you find deal? And the obvious way you will only see at realtor.ca.
Yeah.
That's a great way, definitely. But there are other creative ways to even find deals, like not just financing side. We also leverage creative ways to find out deals. Like, and this is one of the best examples where Jason leveraged the power team and the relationship to get like a 11 unit portfolio in New Brunswick, being in New Ontario, right?
And the great thing, guys, and we'll talk about this later, the reason why I focus on even smaller multi like this, you'll learn later in terms of capital raising and financing, you can register registered funds on title on free and clear properties. And because part of these 11 unit portfolio were, a duplex, a small duplex, you can actually put in first, and they can be free and clear because they're so small. You can put registered funds in first position on properties like this to help finance your bigger multifamilies. And we've done that many times, right, Suman?
Yes, and that was a learning from me too, like because uh, if you are not aware, one of the creative financing ways is you can use registered funds of people for financing as a private lender, right? In Canada. So there is a entire deep step-by-step way. Those of you who are interested, Jason has a end-to-end masterclass. But the advantage is you have to put it in some kind of lien, like they just cannot hand over you the money, right?
Right.
So this is something I learned from Jason, where he leverages these small free and clear properties to bring them on first position.
Right.
These are free and clear titles. So that was a good creative financing lesson or tip which I got to know from Jason.
If you guys have any questions, let me know. Just the fact that most lenders don't allow second positions behind them.
Yeah.
So this is a way we try to get around that, where I have a bunch of free and clear smaller properties that do well on their own, folks, but they're also used to leverage capital raising for larger properties. So, okay. Oh, hey, our famous ice cream. You want to talk about our ice cream?
Yes, and I think this one started with the 8 unit. So so when we acquired this thing, this has a very good mix. This is one of our favorite properties in our combined portfolio. Reason being, this was having a mix of things like it has commercial tenants, it has land development opportunity, it has residential and even short-term rental. So even before we acquired or closed this property, we had a plan laid out, like how we are going to make the best use. So whenever you are looking at a property, even when it is under contract, don't just look it from what is existing. Start seeing what is the STR market out there, or what is the land development, what is the zoning, right? So we started with 8 unit, and then we converted, added another ninth unit over
Mhm.
here in the loft, and also the 10th unit as a storage space.
Yep.
And we were able to increase more income. So when you are going for 5+ units, your net operating income plays a key role, right? And we also, it's a very popular short-term rental market, or in term during the summer, it is known as the lobster capital, right, Jason? Of the
Yeah, I can talk a little bit about that. I mean, folks, for me, one of the concepts I live by is meaningful investments, meaning why are you investing in this property? Like, how does it improve the tenants' lives or the community lives, right? So in this property, the great thing about it, folks, is it's across the street from the I call it the Lobster Science Center. It's literally lobster, the capital of the world here in Shediac. And I find that the great thing here by investing in this, we also there's a restaurant in front there. It's run by a fantastic Filipino family, and I found that by actually upgrading, by adding the unit and taking over, we really have provided the first all-day breakfast in the region, as well as we are able to help preserve, I think, one of the oldest ice cream shops in the entire area. Right, it's been there for 60 plus years. And the great thing too is, again, it's such a hot area during the summertime. We felt that it gives us as investors great diversity of experience, but also great investment opportunity because I mean it's crazy. This area is exploding right now in Shediac. So
and because of these added income, right? And when you are doing added income, naturally it plays a key factor. And second thing is, many of you are stuck on your own, right? Like maybe you are struggling with the financing or down payment, net worth. But when you go for these kind of commercial multifamily, your entire first thing is you can divide and conquer, right? Number one. And second is, if you remember my first properties in the Woodstock single family, where the the same liability or financing was pulling all the partners down. Here, what happens is, let's say Jason has a net worth and I have a certain net worth and our partners have certain net worth. They all combine and make each other stronger. Versus when you are doing a single family, it is solely relying on your
debt ratio.
personal income and
Yeah,
it's pulling you all down. Whereas if you go for 5+ units,
yeah.
you all are combining together and becoming stronger. So
And
if
to
you
be
are going for commercial multifamilies like 5+ units,
yeah.
this can be a good strategy for you all.
And to be clear, the reason why Suman's talking about net worth, folks, is because for commercial lending, right, they utilize many measures to underwrite, but one of which is combined cumulative net worth, right?
Yes.
Yeah,
And they will also ask for Because if you think from the lender's perspective or person who will be giving you the funds, right? Like the first mortgage person, they want to mitigate their risk, right? Because they are having the lion's share over here. So when they see the investors bio, so as you go for commercial multifamily, your investors bio or your team's bio plays a very key role. Like, what is your experience? What is your net worth, right? You want to make sure that is the team or the managing partners, are they, capable to close, right? So
Yeah.
that is the key thing over there. So when you're going for commercial, always make sure that is taken care.
So let's think back and how where we are so far. So we started by making a lot of mistakes in 2021. We started investing remotely in New Brunswick, Newfoundland, small one in Alberta, right? And now we're entering the US, right? So you have your eight
Yes.
unit multifamily in Ohio, right?
So this was, yes. So along with Canada, like Canada, we continue to buy as well, but we want to also leverage US, which is one of the biggest economies of the world, right? And it's all about relationship. Jason always stresses about, and the real estate is a small world and it's all relationship based, right? Now, because I was leveraging the social media, I was going to different events, networking, and having a certain portfolio backed experience, right? In the multifamily space, I started getting invitations to be partners from more people who are veteran in their own areas of expertise, right? So I got invitation from one of the managing partners in the US. Let's do partnership here, and this was my first entry into the US, where the managing partner is in the US, the financing, and Canadians also have financing option. Like you don't have to have US partners, but it's always an advantageous. And as you go for commercial, like multifamilies, the importance of US managing partners start playing a key role. So one good ways can be you can enter the US market, of course, with the right attorney and cross-border accountant, but you can go for 4+ units or below, use the financing option there. But if you have US managing partner, that's always advantageous. So this was my first entry into the US, and this property was pretty excitement because this was my first project in the
But
US.
I'm glad you had a prodding team because my entry in the US was solo and I made so many mistakes. So good for
Right.
you, the partner.
Yes, yes, you need to have partner, and
Yeah.
also for you all people, uh, if you remember, like Jason had a very good point. Like even though the single families of Woodstock were not the best decisions, but still those were getting counted for preparing us for other opportunities. These opportunities which I was getting, these were coming on its own because people see what you are doing and what you're contributing, right? And that's where these opportunities starts coming up, and naturally your experience and mistakes, learning from other people's mistakes, makes you much more experienced for the next deal.
Yeah. This is the big one of the big ones.
Yes, this was the big. So I think this was somewhere in August and September. So we had like two back-to-back acquisitions where we had already formed the power team there in the US. We have
Is it
the key partner
in the same region?
account.
Is this the same region as the other eight unit or another region?
Yes, yes. This is the so one of the this 38. So I have acquired 238 unit. One of them is just opposite to the 8 unit which we acquired. And again, to the relationship, right? Because the realtor saw that these guys are capable of closing, what happens is you start getting opportunities. So this was where the seller was struggling and the buyer couldn't close. Then we got the opportunity, and then naturally we had a strong relationship with investors. So here we did like a general partner, limited partner structure where the general partners are mainly the decision making, they have voting rights and they are managing, and then investors come on as a limited partner. So if people you are not familiar with the structure or want to know more about it, definitely message Jason or I. But as you go in the different league of multifamily acquisitions, Just closing on your own probably doesn't make sense. And another thing is you have to make sure you're not going for too much of debts, like you taking, imagine it's a $2 million property. If you are taking a lot of debt, right? It just hits you at the bottom line. So you have to mature yourself to these kind of thing. So this is where we got this for $2 million, under $2 million. So crazy discounted property. It was cash flowing even with 5 to 6, I think even 7 units vacant. And that's the advantage of these kind of properties is, um, even though many units are vacant, like if my Woodstock property is vacant, I will have a nightmare. Already with paid tenant, it's a nightmare, right?
Yeah.
Plus it's a landlord, not a landlord friendly market. But this is where even where it's vacant, it's still doing well, and it's an investor friendly market. If the tenants don't pay, we have much more control, right?
And the key
So
thing I think a lot of people have trouble with is deal flow. Like, where do you find the deals, right? And I think you
yeah.
said it right there. Both of us, I mean, and we'll continue down this. I don't know, are we at 100 yet? Probably at 100 right now, right? Yeah. Like, it's the relationship, right? Your eightplex
Yes.
led to the 38, right?
Yes.
Like for mine, it was like the 8 and 6plex led to the 11, right? They kind of lead
Right.
together, right?
Exactly.
It's
And
just
even getting invitations from different places, because when you start having that momentum, like, don't hold yourself back. If you have the right mindset, if you are willing to contribute, just keep talking to people. Like when I started in 2021 and 2020 end, all I was doing is just talking to people, understanding what are their goals, what are their aspirations, and where I can contribute. So that is the main thing you have to focus on. And
yeah,
then people start referring you and recommending you in different places. And that's how you move to these kind of properties where you start getting invitations as well.
yeah. So for me, my entry into the US was in Texas, only because I had to take a business trip down there and I thought, hey, might as well start somewhere. I was just lucky enough. I had read somewhere that Texas has a larger GDP than Canada, which I think is true.
Yes.
And so I just took a leap of faith and I just found the largest multifamily closest to the best steakhouse there was around, barbecue place, because when I went to work, a lot of the business folks I went with, they had to stay in hotels for long projects, right? And I thought, hey, you know what? We kind of hang out of where the best barbecue or steak is, the Texas thing. And I thought, let me try it. So made a ton of mistakes here, guys. I didn't go with a liability lawyer, like what Suman was talking about.
Asset and liability
As
attorney. Correct.
liability, yes, that's right, as liability lawyer. I just formed an LLC, Texas LLC, and invested in this. I took promissory notes from my coworkers as down payment, and I closed with the first position with the bank. But I tell you, a lot of mistakes from a structure side with double taxation, with learnings as well of even just Texas law, right? There's certain like policies around say those that can't pay rent. I think it was Section 8 or something. I forget what it's called. It's one of,
Yeah, Section 8 housing.
yeah. So in that I didn't even know about before. So again, I just took a leap of faith. I had some restaurants I like going to with my coworkers. I saw a lot of them just staying in hotels. I thought maybe a multifamily out here. I had no idea what Section 8 was. I didn't even know how to set up a structure. I just tried it. And again, it was 100% creative, backed up with my confidence that because I already have a portfolio in Canada, that even if I made a mistake here, I'd be okay. So again, it's all around the mindset because I already had that momentum that, hey, if I made a mistake, it'll be fine. And in the end, guys, it's still real estate. I made a ton of mistakes here, but this guy's still cash flowing and doing really well, right? Even with Section 8. And in the end, I'm happy I took the lead, right?
And
Nothing disastrous happened. You know, it's a different country. Sure, I didn't even know what I was doing. But even, though I made the mistake initially, I've structured it better now. I've learned from it and moved on from it. So
and
unfortunately,
that's the importance.
yeah, I didn't have a team like Suman. Suman made the right step. he JV with
Yes,
there. So
having the right people, team, and this is one of the things that we do at Infinite Capital Communities. We help people learning from the mistakes or the support that they need, right?
yeah,
Or the connections that they need. Like we have access to some of the best, like cross-border accountants, attorneys, asset and liabilities, because mistakes can be costly. So real estate is a double-edged sword, right? So
yeah.
you have to be making sure. So when we acquire property, we always see, can we learn from other people's mistakes? Can we tap into other people's connections, right? So that is the main thing that we focus on.
I think we can go a little faster now. We're running out of
Yeah,
time a little, but
yep.
so JVing, some people on the call are part of this deal too, just starting to try to help others, right? That's what Suman are all about. So, for this was just, hey, I have some real estate in this area. Who else wants to try out to invest more? So this was one of the first 5 plexes where I said, hey, you guys want to just JV and let's try it out, right? So it's another one in New Brunswick in a very comfortable area where I wasn't before. And then this is your other 38, right?
Was the other 38. So, like last year we had two 38 unit acquisitions, and similar, because we have boots on the ground, we have the credibility, the financing people know us, we have everything, right? So naturally the acquisition starts become easier in the same market. Like this is in the same Ohio belt.
Was
We know the market, we have the
it
established.
was the same person who gave you the lead, or
Yes, yes, same person. They have the property management team as well. We know so that's where we also get a lot of updates, video updates from them, and also the partners who came on board, right? Many people, they wanted to go into the US, right? They've came in as partners. Of course, there are a lot of rules, and you have to fill up the criteria. That comes up only when you are doing personal one-on-one calls with us, just to understand where you are and is it the right time for you to come on board. But people, those who came on board, they also are learning and tapping into the network, and they don't have to do it on their own. So whenever you are going in different provinces, sometimes it becomes nerve wracking, or you probably don't know what you don't know, right? So this was another acquisition which was very straightforward as compared to the previous one. But that year we had two 38 unit acquisitions in the
what
same
was
market.
your capital stack for this one?
So this was mainly again same like the GPLP
Yep,
structure where first mortgage we had, and then we had all the equity partners in the preferred equity.
nice.
Yep.
For me, I thought, Canada needs some love. We need to get back into Alberta a bit, to be
Yeah.
honest, because I thought we had only a duplex there, and like, what we got to continue. So, I did downtown Edmonton, right? I thought, hey, let's try near transportation. There was a new, you can't see it, light rail train here, guys. And I thought this property with some land at the back here is a 2 unit. It's small, but hey, I wanted to get back into the Alberta game. Invest in Edmonton downtown. Again, back to the fact that I have a portfolio. If it didn't work out, it'd be okay because it's Edmonton. It's downtown. It's a nice area. There's new transportation. So simple story there. And how did I close this one? This one was, I think it was only a 50% VTB, and the rest I had to raise. But the thing is, because it is just a 2 unit, it wasn't too bad. Right? It was a raise.
Well, like once you start going for the bigger ones,
Yeah.
it becomes balanced. Like, and every property has its own pros and cons.
Yeah, and this is where I said, forget the U.S. for a bit. We got to give Canada some love, and Alberta specifically, and said, okay, let's go. So we did a 24 unit in Alberta. This was again leveraging a couple experiences. If you even remember, in 2022, right, I had my first experience with foreclosures, right, in New Brunswick, and then of course because we had already built up some small multifamilies in Alberta, and larger multifamilies in the US. Suman has a great big multifamily US experience. We thought, hey, you know what? Let's take a stab at a bank foreclosure, Alberta multifamily, larger multifamily with more of a GPLP type of structure, right?
Yeah.
So we took those experiences from New Brunswick, from the US, from even having small multifamilies around, even in Alberta here. This is west of Edmonton. We're okay, right? Because we had experiences that allowed us to close the deal. And this was a very, very complicated deal that still is going today. Suman says we'll do a masterclass one day. I think we'll probably have to do that because I don't want to explain it. But in the end, there was about $1 million of equity on the buy.
Yeah, I have never seen, at least till in the portfolio that we have, like this kind of equity on the buy. So it was a huge deal, at least for me, and I was super excited. And this is one of the case studies, because this has got lots and lots of layers, like the underwriting,
Yeah.
creative financing. How do you manage? This is a tertiary market, right, Jason, or a secondary
Yeah.
market?
Yeah, absolutely.
So it's a tertiary market where getting tenants is tough, but Jason, I think, big shout out to him. He did a tremendous job in making this 100% occupied. Like, that's amazing, and at a very amazing price. Um, so again, relationship, right? Bank foreclosure, not a usual way to get deals, but
We have partners on this deal, of course. And the thing is about this is that if you ask about the capital stack, we had a mixture of equity investors, right? The GPLP, but I also have registered funds. And remember, guys, you can't put registered funds on the property you're investing in if you have a first position, right? We close this with a bridge loan. We have some equity partners, and the rest of it was all registered funds. But the registered funds, folks, is registered on my New Brunswick properties. Remember earlier in 2022, I bought this portfolio of smaller properties. Some of them were free and clear because they were like $60,000 for a duplex, right? Because there was a bank
yeah.
for New Brunswick, free and clear. So I just put the registered funds there. And by the way, that 60,000 became 120,000, which is great. So that's why I could put $100,000 of registered funds registered on the New Brunswick property to help fund this property, right? So some things we can talk about for those who are interested, but that's how we were able to complete this with 100% creative financing as well. Yeah.
And we have already equity on the buy, so we have a lot of cushion as well,
We have a lot of
like
cushion,
$1 million cushion at least.
a lot, right? And that's
Yeah.
based on a CBRE appraisal, not some mom and pop's appraisers.
Yes. So it's a proper company, like big company for appraisal.
Yeah.
So based on that, we are saying.
In 2024, we started Infinite Capital. We thought, hey, you know what? We're end of 2023, early 2024. We thought we're building up enough portfolio now. Let's start and try to share with folks. And as we built up Infinite Capital, we started continue to expand our portfolio. So for me, continue to give Alberta love, 27 units, right? This is really in the even further western region of northern Alberta. We're closer to the border of BC, right? And working again with some JV partners, only two this time. I was able to pick up these two apartment buildings, 27 units. Great thing about these is that, again, a relationship, right? Both of these are owned by folks that are trying to retire, right? They've been, lifetime, self property managed owners, and they said we just want to retire. So through relationships on the ground, because we have Alberta power teams now, we're able to negotiate, work the teams on the ground. And again, I travel out there. One of the things, guys, that for me, and as you can see on social, or if those that are thinking or in Infinite Capital, I like to travel to my properties. I know some people don't like doing that, but because I was there anyways for my other Alberta properties, I was able to gain confidence in closing these other two. So this is another 27 here. One is by a river, one is in town. Happy to talk about these for those in more detail if those are interested.
And once you start, it's always tough to do the first transaction, or
Yeah.
doing that first deal. But when you establish, things start rolling up, right? That is the main thing you need to understand. If you see, from Ontario, we started with single families, and now we are doing different deals in different market. And just a fun fact is, except my two Ontario property, I've never seen in person any of my properties.
Yeah.
Right? Not saying that you should not see, but I'm just saying it is possible
Yep.
with the right people on the ground. Like, someone has to take care. It's not that you just gamble on any property. We are not saying that. What we
Yeah.
are saying is, with the right mindset, with the right team, and with the right knowledge, you can acquire properties, maintain them, even outside your neighborhood as well, where you are staying.
Yeah.
So that's what we are suggesting. We are not suggesting you to cut corners, but just showing you the possibility.
Yeah. So, Suman, build those relationships on the ground so he doesn't have to go visit. For myself, I find at least most of my leads and my deals is because I'm there. I mean,
Yes.
I traveled
And
there. Yeah.
because Jason and I are partners in most of them, I'm leveraging his experience and expertise
Yeah.
as well. And, naturally we are doing with the other people as well.
So we move and venture forward to some of those in the call that are exciting is what other countries can we invest in? So like our other strategy folks, we always start with smaller units, right? So 2 units in Mexico is actually a single, like a penthouse pre-construction with 2 unit opportunity. And also 2 units in Dominican Republic, same thing for me. These are things for my family. Right? That's why I'm motivated to say, hey, you know what? North America is great. Don't get me wrong, but I think my family love some destination investment opportunities. So that's where the next steps are. And again, you think about how do we actually close on these, right? Isn't it risky, right? But no, because we bring in partners and investors and we all win together. Like the Mexico deal you're here. A lot of great partners we're going to work together where we all can win together as our first property in Mexico. But at the same time, we're going to build on that, learn how do we invest in Mexico as a Canadian, and then how do we build out a bigger portfolio. Same as Dominican Republic. So they're all the same. I mean, in the end, it's the same mantra, same strategy. Start small, bring partners on so you don't take all the risk yourself, and let's win together. Using our experience.
Right. So our main focus is multifamily, and but like these are some of our family projects, cash
Yeah,
flowing family projects where we mainly focus on designing the life using real estate. Just buying buildings in itself is a boring process, right? A lot of stress. So
yeah.
these are some of our relaxation projects
Ah,
we like to add as well for
that's why
our investors.
I'm there, right? Because I like to go to places, so I took
Yes.
the pain to go to Mexico to check it out.
And when Jason paves the path for me, then he gives me the report that someone, this is the next project that you should go through. So, he's now pushing me to
Yeah.
start looking at the places and just have a good time.
Yeah. Now I think our last thing is again, we always start small, trying something new. We're trying some STR. Some of it is arbitrage. Some of it is actually direct. Where downtown Dallas, again Texas, making sure Texas gets some love as well. Texas is another great place to invest in the U.S. because I think the tax is really low, very landlord friendly, and of course Toronto pre-con. So that Toronto pre-con there, it wasn't a choice like recently. It's because it's closing. I 5 years ago or 4 years ago, I put like a deposit down on pre-construction, but it's gonna close, so that's why I have it here as well. I'm not sure what I'm gonna do with it yet. I might assign it. I might try to do STR. Who knows? But again, these STR units, and I think Dallas just launched today, right, Suman?
Yes, yes. As we were in the masterclass, I was helping the guests to check in. So, we have our first guest inside this
Dallas? Yeah,
property as we speak.
yeah,
And this was an Airbnb arbitrage as
yeah.
well,
Dallas,
so we Jason and I, we keep our lane, like our lane is multifamily, creative financing,
yeah,
and also STL, like Jason does good, but we are also leveraging strengths of other people. So don't try to conquer real estate on your own. There is a saying, if you want to go further, you should always go together, and that's what we believe at Infinite is, and we help other Infinite members also, you know becoming stronger, like many people
right.
became stronger when they came in the group.
I think right now, I mean, these are the units we've closed. I think in progress, at least for me, I think I have about 30, 32 other
Yeah.
units that potentially could close. And then, any deals that we didn't get are probably in the hundreds and hundreds, right? That we just
Yes.
forgot, right? And, now in Infinite Community, what we're doing is I'm finding that, we are running out of time. There's only 24 hours in a day for us.
Yes.
So what we're trying to do is we share actively right now with our Infinite Capital members deals, right? Whether it
Yeah.
be in remote places, whether it be multi-families, right? We're sharing deals, and regardless if the community takes it or not, we're funneling deal flow to the community to help everyone win from our experience. And we welcome those that have not joined yet to sort of experience that as well.
And even helping them along the way, like they get questions, they need contacts, making introductions, and that's what we believe in, that So that was just a quick summary, like it's in 1 hour, it's not possible to, dive deep in so many properties for sure. And, we have like, Kazi always is humble enough, he's part of the Infinite community, but he's always humble enough to, come and participate. So thank you, Kazi, for that.
Yeah.
A quick reminder for people, those who have not, they're not aware or they're not yet signed up. We are going to have our in-person full day workshop and networking event in North York, Ontario, on Sunday, April 14th. So if you have not been registered yet, we have a special discount, um, which we will share in a short while. And these are some of the things that we'll be covering. Jason always tells the Infinite community, like, and this is what even I'm learning from him, designing your life. At the end, why we are doing real estate is because we want to have a good time with our family, friends, and doing things that we love. So he will be touching upon designing your life using REI. I will be covering upon some social media, personal branding strategies for REI and capital raising, because how I have found great people like Jason and many other partners was because of social media, personal branding. So we'll uncover certain strategies in that workshop. Then how do you invest in multifamilies outside, right? Like you saw, our portfolio is way beyond Ontario, right? And not only us, there are many Infin8 members who will be presenting their journeys, like how they and what are the key things now they are taking as well. So market research, due diligence, how do you do the contract negotiation phase? So those will be covered there. And then about effective risk management, because as we said, right, promissory note, there are a lot of things to take care. It's an unsecured thing, right? And joint venture partners, you have to make sure that a lot of risk management strategies you need to know. So we'll uncover those. We'll have a guest as well who will be expert in renovation field and zoning, where they'll be talking about the renovation strategies and zoning aspects to consider. You saw, right, one of the unit Jason and I went in thinking it's a 2 unit, but it turned out to be one. So there are a lot of things we will uncover. And then how do you invest outside Canada? Like Jason has good experience and he has helped many partners doing creative strategies in Mexico. I have gone in US and helping other investors and partners in the US side. So we'll be touching upon those as well.
Yeah. So we'll have these workshop panel discussions, etc., JV opportunities, right? We don't have to go through it in detail, but for those who have yet to register, definitely get your ticket here.
Yeah, if you are on your laptop or desktop, I mean, this directly takes you to the, if you want to, we'll give you a 30 seconds or so in case
Yeah.
you want to, just open the link. We have a special discount for you guys,
Here, Suman, or you have to give them.
Yes, it is already enabled. So it's already enabled for you guys as
Yeah.
well.
So why don't we open up for Q&A while people take pictures of this? And
yes, yeah, and folks, those who have questions, feel free to, raise your hand, and happy to go through some of the questions that you have.
yeah,
And those who have not yet registered and want to, attend the full day workshop, you can use this, or we can give you the link as well for it. But this will directly take you there.
I think we'll do
And
some
if anyone has questions, feel free to raise hand, and we are happy to take some questions as well. Anything real estate specific or life in general.
well, almost everything in life.
Yes, absolutely. So, yep. Any questions from anyone? Yeah, I think Noor has raised hand.
Shanak is
And Chris, I think Shaunak has
Yeah.
raised first. Shaunak, please go ahead.
Yeah, Shanak has raised first.
Thanks for the amazing session, guys. And it's amazing to see your growth across the years.
Most welcome, brother.
Yeah. I wanted to ask two questions. One was, how have you found investing in US different from investing in Canada? Like, were you underwriting very differently? Has the financing been very different? And what are some of the challenges?
Yep.
And the second is, there's this area of, I thought in my mind, economies of scale with real estate investing, where, I thought it's better to concentrate investments in one area versus diversifying out. Now
Right.
you have multiple properties in different regions,
Yeah.
but I mean, I was wondering at what time did you decide when to diversify, when to concentrate?
Great question, Shaunak. And I'm sure this will help other people too, because we have heard this thing so long. So great question. So the first question about investing in US, I feel the underwriting aspects are more or less same because the multifamily fundamentals or thing doesn't change much. Main changes where we will see is in the structuring, like especially when you are from Canada, right? Like you cannot just form LLC. Like again, you have to check with your accountant, cross-border accountant, and attorney. But there is different ways of structuring to avoid the double taxation and liability perspective. And from the financing, we do have financing options as a Canadian, but mostly it will be for there are for commercial too, but because I had partner, US managing partner, it just makes it much easier. And even though we have financing there, we still are one step behind. It's not impossible, but one step behind than someone who is a citizen there because they will get higher loan to value, much better preferred rates and all. So it's not impossible. There are a lot of great examples of where you can close in the US, but mainly you will see in the structuring. That is number one. And second, if you go for commercial multifamilies, that's where it starts getting more mandatory. So the higher you go, they will mandate you for US key partners or key principals.
Yeah,
Yeah.
and that's the
Yeah.
opinion I had too. Because in
Yes.
other countries, when we invest in Mexico or Dominican, like these are vacation places, it's a lot easier. But the US is very strict.
Yes, exactly. Like they are like very pro about US people.
Yep.
And your second question was about, diversifying versus focusing. So you're absolutely right. Like our goal, not sure in the near future if we can, like the best way is like if it's overwhelming, definitely it's always recommended to have one market, right? Because, you can double down on more at this growth. Jason and I, we still feel we are in a growth stage. We are a students. We This is what we feel that we, in spite of, we have done a decent chunk.
Hmm.
So we are exploring different markets, but yeah, eventually our goal is because when we will start forming our funds, right, which is more advanced than syndication or joint venture or buying on your own. We have done all the three. In the funds, basically, you need to have a concentration in market, or each fund has to be market specific or niche specific. That time probably we'll drill down, but as of now, we are using our boots on the ground and diversified market, and we are comfortable. But you know focus is important. So
Yeah.
that's
Well,
a great question,
I think
and it's more of a personal choice.
absolutely, and I think for me, yeah, I agree with Suman. We're just still learning still ourselves in terms of where we want to go next level, and um, the concentrations we have, I would say, are at least for me, I always just put a seed of some properties there to build that relationship to a point where I think, hey, now I can grow bigger, right? Because certain
Yes.
power teams on the ground, they can only handle a certain scale of units, and then you would have to expand or change it. So right now, again, we are learning through our portfolio in 5 countries and a lot of the provinces in Canada. So maybe we'll find a better concentration soon, but right now I think we're okay.
Yes.
I don't.
And when we say learning, we are, we can still help people. It's not that, but we feel everyone is a student, like a lifelong
Yeah,
student. So that way we mean, definitely we help people in commercial multifamily investing in US
yeah.
as well. But we like to be known as a student. That's
Yep.
what keeps us grounded.
Let's get through the questions first. And Narinder,
Yeah. Narinder, what's your question?
and then Glenn, and then
First of all, thank you so much for the presentation. I loved it. Like how you went through each and every properties, and how you mentioned pros and cons, difficulties, because like everybody just talks about the success all the
Yeah.
time, but nobody talks about the failures, which are like much more important in my life.
Yeah.
That's how we learn, right?
Yes,
And so
absolutely.
yeah, thank you so much for that.
Yep.
So I actually have a couple of questions, but I'll only ask you the mainstream ones. I don't want to take up others' time.
Yep.
So one thing that I've been recently facing is the okay. Let me start. So for instance, like in the bird strategies or the long-term rentals, right? And if you want to go for OPM, that is what we aim for, right? And suppose if you're going for instance, 100% for now, just for easy calculation. So I realized that if the purchase price is so for instance 100,000 and the renos were like of 20,000, and the after the ARV came out to be like around 170-ish. Like that sounds really good, but realistically, like when we actually go for the refis, they only give like around 80% of the refi value,
Yep.
which almost ends up being like sometimes the profit is not really there after, and sometimes we have to like put our own money just to pay the investors back. Like, how do you assess, like, is there any thumb of rule that you guys have for the ARV to the purchase price, or like how, like, yeah.
Yeah.
So can I just address this first quick,
Yeah.
Suman?
Yes, please go ahead.
For for residential, right, under 5 doors, right, properties, it's 80% loan to value. Commercial is 75 max, right, depending on region you are. It may even go lower. So basically, up front, when you're doing your underwriting on a deal, you should try to assume that up front, right? What is your exit strategy? And one of them, which is to refi and pay your investors back. Now, remember, when you pay your investors back and say even cover your rental costs, you're essentially getting a property for free, right? You got your money back, but you still got this property here, right? So remember, it's not a one milestone game here, right? You refi once now. If it's a buy and hold, right? They can refi again in a couple of years, right? Once it appreciates again. And at that time, you can pull the profit out. Because here's the thing, if you've underwritten correctly, you can still cash flow, which is still profit per se, right? After you pay back your investors. So if it's a long-term, then yeah, you can continue and further. But Suman, do you have any comments on that?
Yes, and another thing that you have to probably, if you can learn from for us, simple and straight, what we teach at Infinite is multiple layers. Like
Yeah.
first is we always want people investor first. Like we don't care about us, number one, first. Like many people want to make the deal. I'm not saying no, it's you. I'm just saying in general, what we have seen is uh, they are kind of just limited to one or two things, like just P note and registered fund, because that's what they are trained on, right? uh, we want to make sure that first is you have to bring in JVs, collaboration, equity, or what is your gap? That's where you leverage negotiation strategies. We don't want to be in the bidding war, right? Because that's where the problem happens. We start paying more and you're not considering, right? And then you have to see it's not about OPM, it's about what we call as YOPM. Why OPM? It's because the goal is not to just bring in all investors. Like your money also should work for you, and you should be at the last. The more active we are in a deal, that should be the last thing. So yeah, if the profit is not made or if something has to be pitched up, like I know there is a lot of things that goes on, as you rightly said, no, people are just showing you the rosy dreams, whereas in reverse we just want you to tell you all the ground realities.
Yeah.
And you have it's being conditioned in the mind that it's okay to have just $10,000 in the bank, which it is not, right? So you have to always think of, like Jason did, he was creating his portfolio using other properties, not just limited to private lending. The only, like, people don't want to part with their equity, which is fine, but it should not be at the cost of investor, right? So let's say the deal is not making sense on a private lending 100%. you have to either let go that deal, you have to negotiate, or you have to bring equity partners and give it more time.
Right.
So you have to understand different ways of closing a deal, not just closing it only through private lending and over leveraging, and then S hits the fan.
Yeah.
So that's
But,
what I would say.
yeah, but we can definitely talk more when we meet in person on April 14th.
Yes,
Right? You're
100%. Yeah, one of the topic
Absolutely.
is effective risk management as a private lender and as a joint venture partner. So I'm sure we can touch more on that.
I want to be respectful of other people with his hands up. I think Glenn has been
Yes.
waiting for a while, so let's start with Glenn.
Yes, absolutely.
Thank
Yep.
you.
I think Glenn, you were next, or did I miss?
No, Glenn's next. Yeah.
Yes,
Hey
Glenn.
guys, great presentation. First of all, I just had a kind of a quick two-piecer. Jason, you were talking about that 8-unit multifamily in Texas with the Section 8.
Yeah.
Kind of sort of familiar with Section 8, but could you just explain that a little bit further? And then before you go into that, I just wanted to see if you guys had a take on the Liberal government announcement about what they're planning to do with giving money to the provinces and coming up with that kind of a tenant bill of rights situation.
I haven't done much of that right now. I don't know if Suman, you have you?
Sorry, I was just replying to some of the attendees. What is the question, or what is the
Read the second one again for him, Glenn. Sorry about
Glenn,
that.
can
Yeah,
you please
basically,
repeat?
like the Liberal government's come out with their pre-budgetary announcements talking about how they're trying to fund housing shortage in Canada as a whole, and they're kind of putting pressure on the provinces to come up with it's kind of like, hey, we'll give you this money, but you need to sign on for this kind of a tenant bill of rights thing. And it like, to me, it seems like they're going to try to move things towards kind of like an Ontario rent cap type situation where the tenants are going to be more protected than the landlords and stuff like that. I was just wondering if you guys had a take on it yet.
So for me personally, I have not come to a place where I'm seeing a rent cap situation. Yeah, that's what I would say, and that is the reason kind of we are trying in places, and again, no one knows the rules when they can change, right? But sooner you execute your business plan, that's much better. But for me personally, I have not come to a situation where I had to go through the rent cap in the
So
markets or properties that I have.
so again, you think about the goal of the governments, right, is to provide housing, right? Glenn, to your point. So when you look at larger multifamilies and you look at its exits, one of the exits that always focuses on housing is CMHC, right? People talk about it all the time as an exit. And I feel that as long as you can align, if you're looking at that as an exit, with the I call it taste of the month because they seem to change a lot. CMHC is if you're aligning with what they're looking for, which is affordable housing, quality housing for Canadians, and helping support that through their insured loans, right? Then I think you're fine. Because in terms of rent increase per se, sometimes an exit for a property doesn't have to be a rent increase, Glenn, right? One could also be qualifying for a CMHC, right? Which can be qualified for through things like affordability, right? So if you provide 40, 60, 80%, depending what level you're talking about, CMHC qualified housing where 40% could be affordable, which is at or below the median salary income affordability, then that certainly can support the refi and an exit, right? But certainly that move by the Liberals, I honestly haven't thought much about it, but appreciate the question. We'll definitely think about it, but right now, personally, I don't. Unfortunately, I do have to leave now. I've actually had a
Yeah,
hard
I can take some question. I think Evo is
I
there,
think
but yeah, I can.
Glenn's question is Section 8 is government funded, subsidized rent, right? So basically, there's a portion of rent that we pay by the government, and there's some rules and regulations as landlords that you have to adhere to accept those type of tenants. So if you want to learn more, certainly you can look online, and we can talk another time. Again, I apologize. I did have a hard stop. So
Yep, I
so
can.
continue.
Yeah, I can take some questions. And thanks, Jason. Have a
Sorry,
great
guys.
evening.
Appreciate
Thanks,
it.
Jason.
Hope you guys enjoyed, and please sign up.
Yeah,
You have yet to sign up.
yes, definitely, folks. If you are around Toronto area, North York, and if you have time, we would love to see you in the full day workshop. And Jason, I think should I take the host
Yeah, take the
rights?
host control.
Yeah,
Yeah.
just give me a minute. I'll take the host rights
Yeah.
from you, and we'll get to the questions from you. Yeah, I
Yeah.
think it should be good.
Good night,
So
guys.
yeah. Okay, take care, Jason. Yeah, Ivo, over to you.
Yeah, Suman, thank you so much, man. Really a great value. Really appreciate it. Just a
No
quick
problem.
question.
Yeah.
You mentioned that you managed to take advantage of creative financing back in Alberta. I
Yeah.
was wondering whether you have any like currently right now in the market, is that still possible right now? Like because I'm
Creative
focused on
financing
Alberta
for
market.
larger deal,
In
you mean?
Alberta.
In
Sorry?
Alberta. So
In
is your
Alberta, yeah.
question, is creative financing possible in Alberta right now?
Yes, for 6 to 8 plex, it's roughly things that you have already done, but I'm curious, like
Yes.
right now.
Yes. So like Jason basically closed, right? And that's where you have to tap into the network. Like network definitely plays a key role, whether you are raising capital, whether you are looking for deals. Like I don't hunt for deals. Reason being, I now have people around me. So I think last deal which I found on my own was 2 3 years, like the Woodstock property in 2021. That was the last deal that I actively sought after. Like I don't look for deals because I know I have built that team. And secondly, about creative financing, yes, it is 100% possible because we we look at deals, acquiring deals in 4 layers. One is, buying on your own. We have done that through registered funds, private lending, VTBs, right? So we continue to do that, but now we are more towards partnership, collaborations, right? So that is another way of creative financing. Second is your joint ventures, and the third is your syndication, where let's say you and other partners, as you go in the more advanced multifamily acquisitions, your experience matters, right? That is another way to do creative financing, where you are bringing in equity partners as well, structuring and everything. So I would say definitely not just in Alberta, but in other markets also creative financing is working right now. So just don't look at creative financing as private lending, right? Because then out of the four options, you are just then training yourself for one level of expertise, right? You have to make sure you are trained for all the four aspects so that if the deal is not working on its own, you still can see if it is working for other two options as well. Does that
Thank you
help
so
you?
much, Suman.
No
Yeah, thank
problem,
you so
brother.
much,
And
man.
looking forward
Appreciate
to
it.
meet you at the event. I saw your registration, so looking forward to
Yeah,
meet you. Okay,
yeah. See you there.
let's
I'm
talk more.
excited. Thanks, guys.
Okay, perfect. See you, brother. Yes.
See you.
Yeah. Chris, next is you.
Hi, can you hear me?
Yes, I can hear you, Chris.
Yeah, so I'm just thanks for a presentation. Looks very good.
Yeah,
I'm just wondering two things. So one is, if you're going to new area and you need
yeah,
to find a power team like a maintenance, like who do the management, everything. How you find those guys and
yeah,
how you believe them they are the right people? One thing, and
yeah,
second thing, now market is changing. Before low interest rates and there is appreciation coming on
yeah,
property, appreciation coming on a rent. But
yeah,
now everything changes. To me, next 5 years, all the interest is not going to change and appreciation is going to be not like this. But
yeah,
if you create the finance and get the money from investor, how you can able to pay? I know your idea
yeah.
is like refinance and pay the investor. But when
Right.
you refinance, you don't have money to pull it down the road. How are you going to manage to pay?
Yeah, and I think Chris, if I remember correct, I think we talked over the phone too, right? So basically, in the multifamily, it's not just your market appreciation, right? So it's not just the comparables, and again, you have to look at the long-term play. It's not just 1 year, 2 year, and second, when we say the market is not good, like we cannot generalize it all because there are multiple layers. One is your country level economics, second is your provincial or state level economics, then comes your neighborhood. So there are a lot of layers possible. So mostly, these kind of things is very generic in my opinion, right? So you have to make sure that it's not just one. So we don't look at like, oh, okay, market is like, let's say if I hear like today, let's say I hear, oh, market is, not good. Do you think there is no transactions happening in real estate right now? Of course, there are happening, right? So
No,
it's not a generic shutdown or a curfew,
no, I'm not
across.
generally shut down. What I mean to say, sorry, what I mean to say, Before there is a lot of room to go rent to increase because everybody paying 500, 600. Yeah, it makes sense to go to 1,000, 1,500. Right now, if you look, all the rents are extreme compared to the income to ratio. Right now, if you look the property, all is more. So how in future we going to make money? I understand if you increase NOI in multifamily, you got the thing, but how much you can increase? Maybe you can increase couple of hundred per unit per door. So
So,
that is
so
not
if you
affecting
see,
the
yeah,
equity.
so if you see, like, I'm not sure which market when you say, but if let's say the property is at 1.9 and in 3 years you turn over a 38 unit and it becomes 3.3, naturally, you can pull some money. And yeah, you are right, like not everyone knows the market, no one can predict the future, but whatever you can pull, and that's how it rolls into, right? So you don't have to kind of make sure, because no investor or no one in this world, even the best economist, can predict, right? So, Chris, what I would suggest is, I mean, I want to be respectful of everyone's time too. Just to, give you the answer, we don't hold ourselves in a way where, okay, market is not working good, or the how part, no one can predict. Like tomorrow, if we ask you or me, we will not know what is coming next, right? So, I mean, we all are living up with that, and I'm sure people are buying, people are selling in any market, and of course, you have to do your due diligence. So, and I think we have talked about this one. And if you still have more details, let's meet in the 14th, if you can come there. Would love to
I
meet
will
you.
come there. And first
Oh,
question, how you find your power team outside in the first deal when you go to different place? If you
yes,
can explain a little bit that, I really appreciate. Because that's
100%.
when I was a little bit confusing because you are new to that area, you don't know anybody. I know with the Google you can find, but how you believe that they're the right people and what they're doing right?
Right. So, like, as I said, right, like you have to talk to people. Like, I'm not sure if you are, connecting with people, but I did. And yes, like you do make mistakes. But, like, for example, in one of the places when I went, I talked to references, two, three people mentioned, then you ask them the questions. And, one province, it turned out to be amazing. So now I'm recommending that person to other people too. And of course, I tell them that you also do your own due diligence because my criteria might be different. In another province, we had a bad property manager, right? So then we had to fire that. So that's how you evolve. So there is no kind of a sure short thing where you will be like, okay, this is because at the end we are all working with humans, right? Like even with you, me, we pass all the checkpoints. Maybe something will not make sense, right? The best cases, then from there you have to, part ways and then naturally look for the other one. So we are not doing Google search. We are kind of, talking to our people. And I'm not sure about you, Chris, but I talk to a lot of people. And, that's the best foot forward. Like I'm not expecting, let's say if I talk to Bruno and Russ and, they give a property manager and it turns out to be bad, I'm not going to hold them accountable, right? It's I take the ownership more with me, and I know that Bruno and Russ are coming from a good intention, and I will just see who are the top two or three people popping up, and then I will run through my check. And even after that, if anything bad happens, it does happen. Like I'm sure many of us in the real estate have gone through bad challenges, and we are all learning from each other. That's all. So that's how I just do my business.
Thank you. So that makes sense. So yeah, one more last thing before I let you go. If we come to 14 and once you join as a member, whatever, how much we need to pay? And once you join a member, so do I get all the references, whatever you already acquire right now? If, for example, you already have different places, if I decide to go there and buy, can I have the same reference or like we are not able to access that
Yes, you
references?
can access for sure. And I think that probably needs a separate conversation. But yeah, to answer you, yes, as part of the community, you have all the access to the networks that we know of.
Okay,
So
cool.
all the property power team members, you get access.
Okay, that's fine. Thank you.
No problem. No problem. Take care.
Yeah.
Any more questions? I saw some great questions on the chat. Not sure if you guys are around and want to. I am just trying to catch up with all the messages. But if you still have question like Parth, I see your question and all. Do you want to, speak up? If not, I can just try to see if there are any. But otherwise, if anyone has any questions, happy to find out from you guys if you have any questions.
Hey Suman, I'm here.
Hey, buddy, how are you?
Hi. So thanks for the great presentation. I think it was my first session where I started my journey in real estate investment, right?
Nice.
So as a beginner, I want to get some of the recommendations from you,
Okay.
some of the steps that I could take towards this journey, and how
Okay.
could I measure my progress toward it, right?
Yeah. So first thing I would say, Parth, and good congratulations. You're starting on your journey because it is not an easy job. Like I'm my full time is IT consulting. I thought that was stressful. After coming in real estate, I know like that's a piece of cake for me. So first of all, congratulations, right? So main things when you are starting in the real estate, I would say see if you can come inside any circle. Like you don't have to, I'm not saying you have to be part of any, like our community, that like it's your choice, but at least be in a community that resonates with you. Reason being, what will happen is you will have a lot of questions, or when we try to do on our own, like when I started, I was trying to do on my own, right? So what happens is when you are learning from each other's mistakes, what happens, you naturally are not going to make those mistakes. So that itself takes you forward. Like let's say if Bruno or Russ has done $50,000 worth of mistake, like mistake number one, Bruno did, Russ did one mistake, and I did one. Now, if you are not part of it or you don't discuss with them, what will happen is there are high chances you will do that same mistake and it will cost you, 100 grands or so, right? So what we say to people is, don't make the same mistakes which have already been happened. Like make the mistakes. There are many mistakes out there. Like, we all know limited, it's such a big field. There are so many things to know. So that is one way you can mitigate your risk no matter what you are doing. Second thing, what advantage will happen is we have a tendency to talk to ourselves on our own, or sabotage our growth. Like, we try to do paralysis analysis. We have access to YouTube, books, we continuously read, but real estate will happen more from doing. So it's less learning, you still need to learn, but it's more of connecting with the right people and doing, right? So these things will take you far ahead. So many times we have helped people where they are constantly talking in their head, and we said, you need to pause yourself, because we want good for them, and said, what, you're overthinking a lot. It's good to think, but too much of overthinking also sabotages your growth, right? So that's how I would say that if you're beginning, it's always a good idea to leverage other people's mistakes, other people's contacts, and understand what are the different things out there. So I am looking for always connecting with people, and that's what I did in 2020 when I was starting out. All I was doing is just talking to people and just understanding what their goals are. People sometimes come out as very selfish, and I'm not trying to pinpoint anyone, but this is what has happened is when you try to suck up too much energy of others, and just you want, like, people can sense those things. You have to give value to people. That is very critical, right? So when I was starting out, that's what I was doing, just talking to people and say, okay, what is your journey, what are your goals, and let me see if I can help also. I may not even say I'm helping, but that's what I used to do. So eventually what happened is I started building my pool of people where automatically opportunities and references start happening, and there is no guarantee for it, but you are just maximizing your chances, right? So these are some of the things, Parth, I will recommend you.
Makes sense.
uh,
Thank you.
no
And
problem.
when you say networking, right? What was your strategy to connect to those peoples? Was it through some events like
It
what you
was
are?
true, yes. So in-person events, virtual events, and being part of communities as well. And the advantage of some paid community is what happens. I'm not saying that free events are not good. I leverage all of them, but the seriousness level of that person in those communities slightly higher, because it takes a lot of courage to, there is a saying in business, it takes a lot of courage for someone to take out your credit card, right? So if someone like my mentors or people who are more advanced, now they're paying $100,000 and up just to be in a 3 days mastermind or a 5 day mastermind. Why they are doing it is they know everyone inside has paid that much. So either their net worth is stronger, or they are so motivated they want to go to the next million, right? So being in free, what happens is, uh, first is you don't have skin in the game. So you will like, oh, it's a free thing, I will come and all. But if you are paying, if you are serious, you will make sure you're putting your effort. Number one is everyone is motivated because that's why they came in. No one wants to pay 5 grand, 10 grand, and just say, oh, I will chill out and, not take action, right? So that's what I used to do. Mix of in-person, virtual, paid communities, and then, learning and soaking from the best people out there.
Sounds good. Thank you.
No problem. Take care. Evo, I'm not sure. I think, yeah. Russ, what's your question?
Thanks for the presentation there. It was fantastic. My question is, through the joint ventures and syndication and just collaborating with others on certain deals, do you find, how was your accountability? Was it faster? It sped everything up, trying to keep each other accountable. I know that procrastination can kind of set in when you're doing things by yourself and you get into your own head. But when you're with somebody else, that reassurance of having a partner and maybe not having them wait, or maybe stepping into those uncomfortable situations,
Yeah.
feel like you're more, your motivation is there.
Yeah. Yeah. So for me, what I saw, there are a few things. First is, and again, like not every JV partner turns out to be as amazing as Jason, right? But in order to get people like Jason, first step is you need to talk, and you need to go through a lot of things. And at the end, we all are humans. Anything can go wrong with anyone, right? So we have to give ourselves that. But what it helped me was, and that's why I stress people to talk and be more active, go to these events, go to talk to each other, so that you get to know as much as possible, right? So what helped me in the JV, sorry, I think, let me mute. If you are not speaking, maybe please go on mute. Yeah. So what helped me in the JV side is, first is accountability, as you rightly mentioned, Russ, is, sometimes when you're doing on your own and you get a bit slacked out, like, okay, I'm in there. Or second, what happens is, oh, it's just me on my own. Oh, I can. So people just start looking at in the neighborhood or maybe a smaller unit. Whereas if they start partnering, like we have some members who were starting on their own. But when they collaborated, now they are underwriting 12 unit, 18 unit building. And even if they don't close, but now they feel more stronger, and they know that there are, right people, and they have the confidence to look at those kind of deals, right? So that is the second help that happens. So accountability, and the third is the strength, right? And then when you're going in the commercial, what happens is different peoples have different strength, right? In terms of, like, I don't look at deals. Right now, we have underwriting specialist. Someone is good with asset management. So you start dividing and conquer. As the relation starts building up, you start understanding who can play what role, and then you start synergizing. And the fourth thing is, as you go for commercial, your net worth starts playing in a stronger way. Like, let's say you have a net worth X, I have net worth Y, and Bruno has Z. So now these three get combined, and as a result, we are able to acquire more, uh, you know, interesting properties which we couldn't have done it otherwise. So, those are the advantages which I have seen. But yeah, like you have to go through a lot of trial. Like if real estate would have been easy, like just I wanted to say to other people in the group here, not to you Russ, specifically, is like we can't be sitting at the place and saying, okay, when all the road will be laid out with gold, then only I will start doing my first deal. It will never happen. Life is never meant to be so perfect, so we have to give that opportunity to us with as much as due diligence and lesson learning from each other possible. Perfect, sir. And always great to see you, Russ. There are some very familiar faces like Bruno, Glenn, Ivo, Pedro, always, Christina, Kerry, everyone, I'm not able to mention everyone, but you guys really lift the spirit of Jason and I, and we are really thankful for you guys always, bringing out this amazing positivity. So, yeah, I think those are the questions. Any other questions, folks? uh, Anyone from any side? And if you guys have not yet booked for the April 14th in-person workshop, if you are around Toronto, we would love to see you there. We can talk more in depth about other topics. If not, wishing you guys a very happy weekend. Okay, take care, folks. Have a great weekend. Bye.
Have a great weekend, everybody.
Bye. Take care.
Thanks,
Bye, Glenn.
Suman.
Bye.
Bye.
Bye. Cheers.